All right. So for a highlight on what ended up being a trend day, we gap open higher, and this is the lesson. You gap open higher. If you rally from that gap open higher, that's indicative of a trend. If you do what we actually did today and we came off, but then pop right back very quickly, that's indicative of some continuation. It's easy to say that after you rallied 20, 25 points. However, we didn't wait that long. Let me blow this chart up. It was in here where they left these 92s, which we thought it was going to be difficult to get through, and they jump. And they jump right around in here when they get like through the middle of some other consolidation. You start scratching your head to say, you know what? They had the chance to take it lower. They had the chance to close the gap. And I think you're going to have to respect this move up. Respecting the move up means that chances are the upside's the right side, because this move is sticking a lot of shorts. And when you have shorts, you always have people selling it on the way up. You just do. And when there's no chance for a pullback, think about this. This market has what we call shallow pullbacks. If this is a rally, that's a deep pullback. This is a deep pullback because it takes back the entire rally from that X to that X, correct? This would be a shallow pullback. So from the start of the move to what might be the top, it's just a shallow retracement. What that does is everybody who's short selling it on the way up doesn't really have a chance to get out because it never comes back down to where they got in. So they end up continuing to chase it. The best pullback was in here, and that had a little to do with news, some Florida cases. It had a little bit of an uptick. And that was another moment where it left a point down there where we said, this move is going to be respected. And it was that, and it was right in here where they're going to retrace this move and continue the upside. And that's the call based on probably sticking some shorts on the way up as it moved up, and you got to respect that particular move. And then the grind happens where it's one of those days you close your eyes, you open them up, you're trading 20, 25, 30, 35. And you got to be careful taking shorts. With that being said, we've got our puke indicator here. We're at the highs here, 22.5 that just happened. These bars shot out red, which means shorts, a bunch of them, said uncle. And if you get a bunch of shorts similar to the same time saying uncle, that means they puke. When shorts puke, they're no longer short. And if they're no longer short, so we take shorts and we cross them out, and shorts are buyers. Well, if you cross out shorts, you have to cross out buyers. There's just less buying, that's all. And so you want to have a good tool to give you good, accurate assumptions of when, if you're going to fade a rally in an uptrend. Keep a lot of impatience with that. Don't hold it. Have small goals until you maybe catch it. But have a tool like this that'll show you when the load is lightened. You want to have a lighter load. If you're short, you don't want a lot of people short with you. I often said to someone, what's your competition when you're short? And the knee-jerk answer would be longs, right? If you're short, your competition is longs. No, if you're short, your competition are other shorts versus shorts. Think of it as if you're a male and you're at a bar and you're looking for a female, and there's a lot of guys looking for females, and there's a lot more guys than there are females. Your competition, people on the same side, right? Especially if I'm there. Have a safe rest of the day. Subscribe, get going, watch these, and pay attention to making accurate assumptions and stacking probabilities. That's what's important. And the other side. Who's on the other side and who might be stuck?